The second category is the external assessments. External assessments. And these appraise and express an opinion as to the internal audit activities, conformance with the code of ethics and the standards. So this is the result of the standard, the opinion with regards to the conformance with the code and the standards. It must be conducted at least once every 5 years by a qualified independent assessor or assessment team from outside the organization. So this is the difference between external and internal. The internal periodic assessments can be conducted at any frequency in accordance with what was reported to management in the charter or directive. External assessments, according to the standards, they must be done at least once every 5 years, and the result of the assessment would be the degree of conformance with the standards and the code of ethics, and they must be conducted by qualified independent assessors. So frequency of external assessments will depend on change. So the more change, the more frequent would external assessments or should be. However, the requirement is at least once every 5 years. So changes in the organization's leadership will affect the frequency, changes in internal audit policies and procedures, significant changes in the structure of the organization, emerging environmental issues, and high staff turnover in the organization. And as you see, all this bubbles down to change. More change, more frequency of external assessments. Now, the IIA has given the companies to be in compliance with the standards 2 options for external assessments. Either a full external assessment, which is the exact same as the internal assessment, as we said, if you look at it, conformance with the standards and the code of ethics, the efficiency and effectiveness of the internal audit activity, the extent to which the internal audit activity meets expectations of stakeholders, the integration of the internal audit activity into the organization's governance process, and identifies areas and other opportunities that offer continuous improvements to the internal audit activity and its staff. Or a this is the D, the self-assessment with independent validation. And this is where a team under the direction of the CAE performs a full and fully documents a comprehensive self-assessment process, and a qualified independent reviewer or review team performs sufficient on-site tests of the self-assessment so as to validate the results and express the indicated level of the activity's performance. So a smaller company can still be in compliance with the IIA standards. They don't have to spend money or bring in somebody externally to do a self-assessment. They can do a self-assessment and just pay for somebody to validate the assessment. So instead of spending maybe 5 days, they could do it in 1 day. So it will cost less. And this is done once every 5 years, and the department or the function will be in compliance with the standards. Now, who are the qualifications of the external assessor? The IIA also does not set a minimum requirement, but they do say qualified and independent. So the qualifications generally, they must demonstrate competence in two main areas: the professional practice of internal auditing, including in-depth knowledge of the IPPF and the external quality assessment process. Other preferred attributes: sufficient education background, technical business experience, sufficient recent experience in practicing internal audit work at senior level, and sound judgment, excellent analytical and communication skills. Now, the independence and objectivity of external assessors. The following are not appropriate. They are not independent. So individuals from within the organization, even if they're from other departments and organizations separate from the internal audit activity, are not considered valid. Individuals from related entities such as parent, sister, or subsidiary company, they are not independent. External auditors of the organization, especially when the external auditors rely on the work of the internal auditor, are not independent. And here I just like to emphasize one thing. When we talk about external auditors, we need to distinguish between two external auditors or two groups. We talk about external auditors in general and the company's external auditor. So, for example, the world, you have the big four, PwC, KPMG, EY, and Deloitte. They are all considered external auditors. Now, what we're saying here is that if we are audited by Deloitte, Deloitte is the one that's not qualified to be an independent external assessor, but the remaining three can be. So an external auditor can be an independent assessor, but not the company's external auditor. That's what this means. So external auditors of the organization. External consultants with previous or future participation in the internal audit assessment, not independent. External consultants providing other types of services such as risk management, IT, financial reporting, internal control, governance are not independent. External parties with personal relationships with organization personnel are not independent. So none of these can be considered an independent appraiser. It has to be a totally independent appraiser.